All right, everybody, welcome back. This is Midweek Market Breakdown, where we take a look at the markets and I show you some of the trades that I had during the week that you can maybe learn something from. And I also show you some of the trades that I have on my radar that I'm looking to take advantage of during the week. If this is the first time you're seeing this, please hit that subscribe button to see more of this. And if you do learn something here today, do me a favor and hit that like button and share this video as well. All right, before let's go ahead and get started. There you go. Let's go start in the euro dollar, the daily chart. We did pass that previous support level right here, and we're now testing this small level of structure right here. Let's go down to the 240. All right. 240, nothing much here. The only thing I see here actually is that we're still making higher lows and higher highs. However, if you notice our swings are right here are actually getting smaller. Our moves to the upside are getting smaller and smaller, which could mean that we could see a pause or a change in the direction of the trend. Let's go delete that. Let's go on the 60-minute. Okay, nothing much there on the 60-minute. Let's go on dollar CAD. All right, dollar CAD, you see we're making higher lows, but it's looking like it's harder for price to actually penetrate this level right here. So if we do see a break above these highs right here, we could potentially see a breakout to the upside. Let's go down to the 240. Nothing really here yet. If we do see this come down, we might be looking for a possible Gartley pattern, but this is still have a lot of ways to go. So let's go on the 60-minute. On the 60-minute, we do have a little bit funky looking. We do have a deep Gartley right here, or a possible deep Gartley. It could complete at the 127. This is one of the deeper ones, so you do get a better risk to reward ratios with those. Looks like this is probably about at least 1.5 to 1 or 2 to 1. So yep, about 2 to 1 to first targets. So it looks, let's take this out. It's confusing sometimes. So let's do this. And right there. All right. Let's go to dollar yen. All right, dollar yen is still on a bearish move. We are down here to previous support level, we can find some, it's possible that we find some support there as well. So be careful going short at that level. Let's take a look at the 240. Don't really have anything in the 240. 60-minute. Okay, we technically have a double bottom right here. Now, it does have divergence. The problem with this is that on the daily chart that we took a look at, the previous low of the previous bottom is actually a little bit below 100. So the safest stop, if you're going to take this as a double bottom, has to be below that 100 even. And that is going to be about about 80. That's going to be at least 100 because you want to go a little bit more below that 100 even. And that's a little too much for just this double bottom right here. It is a good area to me, at least. So what I'd be looking for is a 2618 type trade on this. So that would mean that I would wait until price actually goes above here and breaks this high and then comes back, and then take that to buy right there. And that way I can use this low right here as my my pivot to put my stops in. That way I have better stops. Let's go to pound dollar. All right, pound dollar, we're seeing that range kind of form right here. It is about in the bottom of that resistance level, so be careful buying this type of market or this market. Let's go to 240. Nothing there. Let's go to the 60. Nothing too much there. We could possibly have a double top at here as well, and we could get that divergence. Same thing with this one. The high of the this resistance level is about the 134.90, and that's a long way from there. So we're looking at this move right here for the safest stop for about 126 pips. So that is a lot of risk. So I'll be if I see a entry opportunity at a lower time frame that could limit my stops, I would take advantage of this one, but only if that shows up. If not, then we move on. Okay, next one is the Aussie dollar. Yep. All right, the Aussie dollar, we still have that bearish Gartley pattern, and the daily still has not been invalidated. We still haven't gotten to our completion level. Now, there's actually this cool thing happening over here. This probably we'll take a look at this in the 240. Let's go down here in the 240 chart. we have there a deep, slightly deeper possible Gartley pattern that can form right there. If price comes to complete at the 127, you can take advantage of that. First targets, of course, is to 382. It's about 126 pips. Stops in here is actually about risk to reward ratio on this one is about a 1.5 to 1. So about 72 pips. So if you want to see that, that would be, oops, that would be right here and right here. And the nice thing about this is if it does complete, it does not invalidate your daily pattern. So if you do take advantage of your daily pattern, you can take advantage of both. So let's go ahead and go down to our 60. Let's take this out, too much. Well, let's see. Looks like we have another one right there. This one is looking like a 1-to-2 ratio for your risk to reward. Looks like this. Let's change that color so it's not confusing. All right, and with this one also, if price just turn on a dime right here at this 127 level, the bigger pattern is still going to be valid for you to take advantage of. So it can go two ways. It's a lot closer to going to this smaller pattern right here, but you'll never know where it's going to go. But we're 2 steps ahead of the market, and we know what we can take advantage of on either way it goes. So let's go to New Zealand. All right, New Zealand. Making higher highs and higher lows. Looking like there's a resistance right here that still has not been penetrated. Let's go to the 240. Oh, this one, I actually purposely left this here. A lot of the times people ask me about stops. So everyone that will tell you that stops is actually, you want to always limit your stops. So what you want to do though is that you want to limit it, but still not put too little of a stop. For example, I do use a 113. I didn't invent it. It was actually taught to me by one of my trader friends and mentor, Akil Stokes, and he said I guess someone brought the 113 extension up during one of his classes. So I started using that. I did compare it to the other way that most people get their stops, which is about a 2 ATR stop. Around right here is about 40, 45 ATR. So that would mean that's about 80 pips. And from here to, let's see, 80. So 80 pips is going to be about right here. If I've used the 2 ATR stops, I would have been stopped out in this trade. Now, because I used the 113, I actually almost did get stopped out, but it was 29th, so last Friday I actually got to a second target, so which is actually got me about 168 pips total for this trade. Now, the bad part about that is if price had just come completely down, telling me that I was completely wrong about my prediction, then I would have been stopped out at more loss than if I used 2 ATR stops. So those are the things you kind of want to play around with when you put in your stops. You want to make sure that it's not too much that you start to bleed your account, and it's not too little that you get stopped out every single time the trade goes a little bit against your prediction. And like this is one example of those kinds of things. Other than that, let's delete this, and oops. Oh, it doesn't want to delete it, but there's nothing much here in the 240. Just do this. And let's go to the 60. See. Not quite. Nope. And nothing on the 60. So next one is pound yen. Pound yen, we're seeing that about the same thing that we saw in the pound dollar, which is that range. Let's see. 40. Nothing there. Seeing the 60. Nothing there. So let's go to the last one. Euro yen. Euro yen, about the same thing with that range that we have, but still far from both our points of support and resistance. So Euro. All right, we do have a possible bat pattern right here. Looks like this is going to be a big pattern though. Let's see, risk. Ooh, about 184 for our risk. This is something that I will not be taking advantage of. But I'll just show you. And it looks like this. Let's go down to 60. Nothing much on the 60. All right, so there you have it, everybody. And I will see you next week. Good luck, traders.